All right, stocks slowing down a little bit there. Let's bring in Jeff Kleintop. Let's bring in Collin Martin. Let's talk about the session and hope this thing doesn't give it up. Jeff, the international trade looking good again today. Chinese stocks up 5%. That seems like a big one for your line of work.
Yeah, China, a lot was focused on this March 5th meeting. We've been waiting for this for 6 months. What are they going to say in this meeting when it comes to the growth targets for the year, the employment targets, the inflation targets, and how are they going to back that up with stimulus numbers? They delivered on the promises, 5% GDP target, same as the last couple of years, and that's not an easy target to hit. They actually lowered their inflation target, but look, the hard part is, what are they going to do to actually make this happen? And they gave us a few details, but maybe not enough, certainly not a bazooka. They talked about more bond issuance to support consumer spending and a little bit more to fund government local budgets in order to help them buy back some property and provide a floor to the property market. It wasn't really detailed. It wasn't really that different than what we already knew. So some ways it was good news reaffirming that they're committed to growth this year and getting it where it needs to be, still light on details. So the market liked the news. Separately, what I'd say is that we saw a bigger rally in tech shares in China than we saw on, let's say, industrial consumer shares. And I think that's more around mentioning DeepSeek and AI as part of the initiatives here and part of the focus of the government going forward, suggesting tech may get a leg up after years of being bashed a little bit by the current administration in China.
Okay, so taking off their own foot from their own neck, basically, is definitely helping. Big move in copper, but with crude oil down sizably as well. I guess the commodity impact for bonds still limited, Collin, or should we read into some of the selling in treasuries the last day and a half here?
I think the movement we've seen, not just over the last day and a half, but really over the past few weeks, comes down to trade uncertainty and tariffs. I mean, of course, commodities play a role, but I think a lot of it does come down to the tariffs. When, will they be instituted? How long? We got a little bit of a reprieve today. We saw Treasury yields move up a little bit, potentially on the news that fewer tariffs in Canada. We also got some slightly better than expected data from the ISM. I think that was important because there are these growth concerns out there right now from a lot of sentiment indicators, but also things like the ISM manufacturing. So to get a better than expected ISM services index was a step in the right direction. But then we also got a move up in German government bond yields. So that could have played a role as well. You have to remember that it is a global market and our yields are, they move in relation to other economies. Usually it's our yields are doing the moving. But in this case, that could have played a role. So I'd say a little bit of a breath of fresh air in the market today, but we're still, the outlook is still pretty uncertain right now. And I think we'll probably get a lot of volatility in Fed funds futures market, expectations for the Fed over the next few quarters, and especially in the Treasury markets as we get, more chatter from Washington.
Okay. Jeff, chatter from Washington as it pertains to tariffs, with the dollar now completely, I shouldn't be off. I should be specific. The dollar, if it goes like a couple ticks lower, is exactly where it was the election week. My case I was making at the top of the show, that suggests to me that the tariff stuff maybe is now getting fully priced in. What do you think about that analysis?
Yeah, I think there's a number of different factors. I mean, part of what went on today wasn't so much about dollar weakness versus Canada or Mexico. It's really versus the euro, and we haven't really talked about tariffs there. So true. I think the issue there was just a brighter outlook for spending and the higher yields and a steeper yield curve, as Collin just talked about, in Germany, lifting all the yields in Europe. So you got higher yields on the longer end in Europe. That's sort of helping and brightening the outlook. And this is on real growth. This is on more government spending, driving the economy there. So I think that was actually maybe more of a factor today than the tariffs.
It does seem that if the dollar's coming off because the rest of the world's finally going to perk up economically, and not because we're going to like boomerang ourselves and crash our own economy, more just the kind of relative strength elsewhere, then that's a pretty good reason then for a dollar to come off in a way that's positive, or at least not negative in a way that I think some have interpreted a fair amount of this. jobs Friday, Collin, to come back to that point. Jerome Powell as well. Do you think anything in the last 2 weeks that's happened in risk markets or the White House is going to play a major role in what we hear from Powell?
I think it could, because over the past few months, Powell and the Fed couldn't be just specific about how much of proposed policies are going to play a role in their outlook, and now we're getting more of that. So I think that could be a driver, especially from an uncertainty standpoint. The Fed does look at expectations, not just inflation expectations, but also growth expectations. So I think they'll highlight that. I think Friday's jobs report is going to be really interesting. The labor market has generally remained pretty resilient over the past few months. We got a little bit of a scare last year. But the unemployment rate has come down. Monthly payroll gains have remained at a pretty strong level. Now, there's some cracks here and there, but for the most part, it's been resilient. It'll be really interesting to see this Friday, though, because we want to see if there is some sort of spillover effect because of things happening in Washington, not just at the government level, but if there's spillover effects, to contractors and the like. And also, we had some weather-related issues. So the expectations are for a relatively strong report. I think 160,000 is the median forecast for the payroll gain, and unemployment rate still at 4%. I think if we got a weaker than expected report, I think we'd likely see yields fall and potentially pretty sharply, because that would kind of tie in with all the negative sentiment that we've been seeing lately.
Well said. Good stuff. Thanks, gentlemen. Jeff Kleintop, Collin Martin.